Welcome back. As Greece tries to cut spending while boosting revenues, the European Union's statistical office, Eurostat, says that the country's budget deficit and debt will be revised upward. But the Prime Minister of Greece today told the Greek Parliament that despite the change, the nation will meet its target of its austerity plan. Joining me here at the NASDAQ in a First on CNBC interview right now is the Finance Minister of Greece, George Papakonstaminu. Good to have you on the program.
Good to be here.
Thank you so much for joining us, Mr. Minister. We're here speaking to you right ahead of your meetings at the International Monetary Fund in Washington. Can you give us a status check?
Well, it's been a hard few months, but we're hanging in there and we're producing results. The deficit is down. We're going to hit the 8% target at the end of the year. We've submitted a pre-budget for next year with a 7% target. In fact, those revisions that you were mentioning refer to the past, 2006 to 2009. We think they'll have very little impact on 2010. We're confident that we're getting there.
How will the interest rate scenario be for you? I mean, many people worrying about that the rates will have to go much higher, correct?
Well, we have higher interest rate costs at the moment because the spreads are higher on Greek government bonds. There's no question about that. In fact, we have about 1 percentage point of GDP higher next year than this year. And we're hoping that we won't see any increase in interest rates for the foreseeable future. But for us, the main point is not just the fiscal consolidation. For us, perhaps the even biggest challenge is doing the reforms. We finished a very big pension reform, a huge overhaul of the pension system, tax reform, labor market reform. We're opening up product market, opening up closed professions. These are the kind of moves that will make the Greek economy viable in the medium term.
These are really important long-term structural changes to the economy. So what's most important in terms of changing the economy over the long term to truly get your arms around the debt, not just over the near-term commitments, but long-term?
At the end of the day, it's all about growth. It's whether you unleash the productive potential of the economy. That's what we want to do through the kind of supply-side shock that we're making. All those reforms open up the kind of sectors that will be the growth drivers in the next few years. We're making it easier to set up a business. We're making it easier for large investments to come into the country with a fast-track process so as to bypass bureaucratic administrative hurdles. And they are what are going to be driving investment and job creation in the years to come.
I was very happy to see the Moody's report. Moody's said that it was impressed with the Greece overhaul of public finances and said that if the leaders, including yourself, continue on this path, that the risk will be to the upside. Where is the country today in terms of that comment? And now that you've had some time to implement the austerity measures, tell me what you're expecting for the next year.
Well, I think if you look 3 months ago, very few people would have thought that we would be where we are now. We're beginning to, if not convince the skeptics, at least change their attitude. You mentioned a particular credit rating agency. There are others, many banks that are reporting on what we're doing and are saying that we are moving there. We're getting there. The program's on track. The reforms are on track. So if I want to look 3 months further, I would say that we're close to a point where the negative story on Greece of the last year will turn to a positive story, a story of a country that takes hold of its destiny and makes some painful changes, but with serious medium and long-term positive consequence for its citizens.
And in fact, you're seeing investors, large investors around the world, publicly talk about Greece. We actually had Sheikh Hamad on recently from Qatar, who said he's investing in Greece. And I want to ask you about that because you've got a number of articles highlighting these sovereign investors coming out and saying that they are looking to invest in Greece, particularly China, Libya, the Qatar Investment Authority, Sheikh Hamad. What are the big opportunities there? You've got investors watching right now. What's the sell?
We've got two types of interest. We've had some very big players such as the Norwegian sovereign fund saying they will invest in Greek government bonds. We had the Chinese Prime Minister a few days ago in Athens announcing that China will not only withhold to its Greek sovereign holdings but expand them in the next in the period to come. But also we have investment interest in tourism, real estate, in infrastructure, in logistics. China with its big investment in the port of Piraeus, which is becoming a hub for the broader region. Qatar with its interest in the area, in a big real estate, the old airport in Athens. Other interests in Abu Dhabi, for example, in an LPG plant, in green energy. There's a lot of investors that are out there, are looking at us with a lot of interest. Some some projects are already in process, and some will be forthcoming.
So are those the sectors that you would look toward growth in terms of leading the economy toward growth?
Well, remember, Greece has had a very strong growth record in the early part of this decade. We were the fastest growing European country at some point. We now need to reinvent ourselves, build on our traditional strengths, tourism, shipping, and create new comparative advantages around high-tech, green energy, linking our cultural heritage with agricultural products and tourism. These are the kind of growth drivers for the years to come, and they will help the country regain the kind of growth potential that it once had.
Now, of course, I know you've had some very successful auctions coming to the public markets, but let me go back to the first question, really, that I started with. Your goal is to cut the deficit to 7% of the GDP by the end of 2011 and 3% by the end of 2012. It was nearly 14% at the end of 2009, so obviously real success so far, but the government has already cut spending and already cut back on a number of programs and raised taxes. Spending on interest payments, of course, will increase. So how do you get around this vicious debt circle and reassure bond investors who, like those sovereigns, are looking for opportunities?
That's a good question, because we did some very difficult things in 2009. For example, we slashed public sector wages by 15% and pensions by 10%. So you can't keep doing this every year, obviously.
Exactly.
But what we've done also is change the tax system so as to tackle tax evasion, which is a big drain. And without increasing your tax rates, once you tackle tax evasion, you can increase your revenues. And we've put in place a system for our budget, which makes us control expenditure over the years to come. And there's a lot to be done there. There's public enterprises with huge losses that need to be restructured, and we're doing so. There's privatizations that will bring in revenue and also keep expenditure down. So without any big further cuts such as the ones that were done this year, and with growth resuming, we'll be able to have a viable medium-term fiscal situation and a growing economy again.
How tough was it to go underground and get those tax evaders and ensure that there's a new mentality? I mean, it's got to be tough to turn around something that has been sort of underground for a long time.
Yes, it has been tough. We made it very clear that we would not stop in front of any kind of political problems in that sense. We went after high-profile cases. We went after big yacht owners that used to have their yachts on offshore companies, doctors that would hide their incomes, other free professionals that would not be declaring. We introduced a system of a carrot and stick system with receipts, because people would not cut receipts, and that way there was a movement of citizens going and asking people to give them receipts. And all this changes the culture. It changes the way people operate, and it makes tax compliance much more a part of everyday life, as it should be.
Yeah, this is very important. And in fact, people feel like, okay, I may be getting away with something, tax evasion, but at the end of the day, look what it's doing to the overall country. So there has been some, unrest, certainly civil unrest, in accepting some of these new policies. I know that. Civil servants mounting strikes in response to the austerity measures. Some people obviously very unhappy. How do government officials like yourself sell these people on the idea that, look, this is going to be best for everybody?
Well, that's the big challenge. I mean, we're trying to convince society that we're making a deal with them, which is there are some tough times ahead, but everybody will come out stronger. The economy will come out stronger. There will be more jobs, more investment, and we're doing everything we can to make sure this pain is administered in as equitable a way as possible. And that kind of agreement is hard to be able to convince over time. For the moment, we seem to be doing it. There are protests, there's been demonstrations, there's been strikes, less than in some other European countries. In essence, if you look at the kind of measures we've put together and their difficulty, the process have been less than what one would have expected. And sometimes, I often said, a burning trash can on the central square of Athens makes great TV footage, but it doesn't always reflect what's going on in the country.
Good for you. That's a great analogy. Well, let me ask you this. The other Euro countries, how have they been responding in terms of supporting Greece? Are you happy with what you've seen from the counterparts in the Eurozone?
Well, the Eurozone members had some difficulty in the beginning to support us because they were not convinced that we would be doing what we should be doing. Once they got convinced, and once we signed up to this 3-year program with the 110 billion from their side and the strict conditionality on our side and the reviews every 3 months whether we're sticking to the targets, they've been very supportive. All the Eurozone members have been supportive. The European Central Bank has been very supportive in even going the market operations with Greek government debt, the European Commission and the IMF. So we're all in this together, and as long as we keep doing the right thing, they will continue to be with us.
What will be your message at the IMF meetings over the next couple of days in Washington this weekend?
Well, as far as we're concerned, the message is we're on track. We're doing the tough things, but and we will continue to be doing it because there's no other way. This country has got to change, and we are bringing a broader message of change, not just a question of slashing the deficit, but of changing institutions, rules, behaviors in the country. And that's what the Prime Minister keeps coming back to. That's the message from our point.
And what will be the likelihood that you need more aid away from cutting, but actually new revenue to help the situation in the coming years?
Well, new revenue will be generated by an economy that is growing. And if we bring the economy back to growth path with the reforms that we're doing, there will be no need for any additional money.
Okay, and real quick on unemployment. I know unemployment is still set to rise. How do you get your arms around unemployment?
Well, that's unemployment is set to rise to about 14%. We're trying to put in place structures and policies to help the unemployed. But at the end of the day, unemployment will go down when the economy is growing, when there's investment happening. Investment needs financing. Financing needs open capital markets. And capital markets will become open once they're convinced that we're doing the right thing in terms of putting our fiscal house in order.
Minister Papakonsdanu, it's good to have you on the program.
Thanks very much.
We so appreciate you joining us today. Thank you very much.